Okay, hi. Good morning, all. This is Zaheer Anwari on behalf of the Dynamic Trader. Can I just get a quick hello that you can hear me, that you can see my screen? Hi, administrator. Yeah, good. Okay, fantastic. Okay, brilliant. Okay, hope you're well. Can I get an idea of how many are in the room as well, please? Yeah, hope you all had a good week so far. And yeah, it's been quiet. The foreign exchange market continues to remain quiet, particularly from a trend trading perspective. I'm not sure the approach of the people in the room, but of course, if you're day trading, short-term trading, then there'll always be reasons to take a trade. But if you step back and look at the bigger picture, then brilliant. Hello, all 11 in the room. Fantastic. If you look at it from a, a longer term perspective, then generally the opportunities aren't there in foreign exchange, and you'll find moving into stocks far simpler, far more profitable at this stage. Um, as a trader, I don't limit myself to just one market. Regular viewers of my webinar will know that I like to diversify my portfolio, and it's imperative that you do. Where you simply want to go where the money is, and the money isn't always in foreign exchange. Hi, Montreal. Hi, thanks for the hello, guys. If you can say hello, please do. It'd be good to know who's in the room and who I'm talking to. So yeah, please drop a hello, and if you do have any questions, please put them in the chat box, and I will get back to you. Yeah, good morning, Montreal. Okay, so before we get into the charts, as always, I just want to direct you guys to a few of the websites that I have. So the techniques that I cover in the webinars, all of these techniques and more will be covered in the training that I do. So zaheer.live/seminar. This is if you're here in the UK, or if you're able to come into the UK on June the 16th. I'm doing a live day of training, and with this comes 3 months of community support. You get training in foreign exchange and stocks. You get access to software. You'll get watch lists, so scanned watch lists when it comes to stocks. So things like stocks, guys. There's 5,000 plus stocks in the US stock market. Yeah, and that's where sometimes the stock market is quite daunting for many people, because if you compare it to foreign exchange, we've only got, let's say, 50 or 60 currencies that are worth trading. Excuse me, guys. I've got a bit of a cold, so if I keep on sniffling through the webinar, then apologies. So yeah, there's 5,000 plus stocks in the US stock market. To narrow down to the stocks that are worth trading, let's say the 5 or 10 stocks that are worth trading, there's a process to that. And how do you do that? And the answer is, you want to have a good scanner. You want to have software that will scan through all those stocks within a few minutes and give you the criteria, the best stocks that meet your criteria. You don't want to be going to websites such as Yahoo Finance and all these other free stock picking websites. They don't generally give you the best stocks. You want to be able to determine the best stocks through your own analysis and through your own scanning processes. Now, the scanner that I use is MetaStock. So if you guys want to go away and do some research, the scanner that I use is called MetaStock. Don't mistake that for MetaTrader. MetaTrader is something that I would recommend people stay well away from. What you want to is good software that meets your needs. So the software that I use in terms of my charting, I don't use MetaTrader, I use eSignal, which we'll be getting into in a second. And I have proprietary tools that work within the eSignal platform. I then also have MetaStock, which helps me to scan through the stock market. Now, MetaStock costs me around £3,000 a year in terms of subscription. Now, because I've got the scanner, my community members don't have to pay that £3,000 a year, as I do the scanning for myself, and I then put the scanned watch list in the community. Okay, so you will get this scanned watch list as part of the training. If you are abroad and of course I can't attend the training, then you can do the training online. So Zaheer.live /apprentice. Whether you do it here in the UK or whether you do it online, will all be part of the same community. It's just the way you do the training will be different. The apprentice training is normally done through webinars and videos, whereas here in the UK, you also have access to the videos, but you also have the added benefit of the live day training, which is included in that 297. Okay, so all the techniques that I covered today, if you missed them, you can of course watch the recording that Fix Street put up, but you can then take it further through the training that we do. Okay, so let's now get into the charts. And guys, I would recommend taking things further. You don't want to limit yourself to free all the time, which is a mindset that a lot of private traders get into. It's this idea of building $1 million or £1 million trading account on free information, free strategies, free software, free webinars, free training. Everything seems to be free. There's no investment in it, and everyone has these grand goals of becoming a full-time trader and living the lifestyle, having the car and the house and the holidays and whatever else people aspire to have through trading. Yet they want to do it with as little investment as possible, and I just find that a very surprising approach as to why people think that riches can be made without any investment. It's just a fantasy that a lot of people are chasing. Administrator, can you tell me if you can see my charts okay, please? Brilliant. Thanks for sharing the link as well. Okay, fantastic. All right, so what you can see in front of you is a typical chart setup of mine. You have the monthly chart at the top with key levels of support and resistance. You have the weekly chart bottom left with the 200 simple moving average and trend filter. And you've got the daily chart bottom right with the 200 simple moving average and also the trend filter. So what I'm looking for is on the monthly chart whether the market is in trend or consolidation. So if you look at the Aussie dollar, US dollar right now, quite clearly here is a period of trend. We can see that we've got a bearish trend in progress. Here is a bullish trend, consolidation. Here is a trend. So we had a trend, consolidation, trend. Currently, the market is in consolidation. If you look at the range of the consolidation, the high is around 0.80, which is a round number, and the low is 0.70, which is again a round number. So round numbers are significant. When a market is in consolidation, like it is on the monthly time frame, I'm not interested in trading it. Now, of course, the mind trick, if you like, that many private traders will then play on themselves is, well, trends appear on the lower time frame. I'm happy to go down to a 15-minute time frame and catch a trend that lasts an hour. And these are the kind of games that private traders will try and sort of play with themselves to kind of then encourage them to open and close positions through day trading. It goes against the very fabric of what a trend is. If we define a trend, anything that is a trend is long term. If you look at fashion, the minimum is 3 months because it's seasonal. But often we talk about fashion much longer than that. We can often talk about fashion as a decade. If you look at the 60s or the 70s or the 80s, we have periods where we have a particular look to fashion. So a trend in definition is long term, weeks, months, years, not minutes and hours. That's just again, as I said, that's just something that private traders convince themselves of so that they can trade on lower time frames. And if you're trading on lower time frames, you're capping your profit because you're dealing with small moves. You're dealing with the unpredictability of the market. You're dealing with intraday noise, a lot more candlesticks. And the more you trade on the lower time frame, the more you're paying in spreads and commissions. And it's just very unnecessary. And the reality is it's inconsistent. You may have one good day, but then you give it all back the next day. And it's very frustrating. So what you want to be able to do is identify the long-term trends using the monthly time frame. So if you look at the Aussie dollar, US dollar, here is a trend, here is a consolidation. Now, this is just the Aussie dollar, US dollar is a very good example of the currency market in general being in consolidation. Here is the euro dollar. Here is a trend. When I last traded the euro dollar, and I traded this, I held my positions for about 9 months, and I extracted 15,000 pips in that 9 months on 5 compounded trades. After every trend, the market consolidates. This is a consolidation. This is not an environment that you want to be trading. Pound dollar. Look at the monthly time frame. Here is a trend. Here is a consolidation. If you look at the actual structure of the pound dollar, if you go back to 2014 at 1.7, this was the high. Then we had this move to the downside, came to 1.2 at the end of last year, and since then it's gone through this little bit of a consolidation or a pullback to 1.3, whatever you want to call it. But is this a reversal, or is this simply a pullback before a continuation to the downside? Well, let's look at the structure. Trend to the downside, pullback, trend, pullback, trend, pullback. So what can we conclude from this? The answer is that we don't know. We need to see price actually make a move. We need to see price either continue to the upside, in which case we then have a reversal, or we need to see price clear this low point at 1.2 and move to the downside. And if it does move to the downside, well, how far could it go? If we go back to 1985, it's been as low as 1. So if price clears 1.2, then we could see price move all the way down to 1. And I know people out there will say that will never happen. Yeah, well, we heard that at 1.6 that it wouldn't go to 1.5. We heard at 1.5 that it wouldn't go to 1.4. We heard at 1.4 it wouldn't go to 1.3. We heard at 1.3 it wouldn't go to 1.2. So I wouldn't be so sure to say that it wouldn't happen. Leave your opinions aside. We can all have opinions when it comes to politics and who should be in power and etc. etc. Fine, we can have opinions, but when it comes to trading, you shouldn't have opinions. Your trading should be based on what price is telling you. Price is your number one indicator. So don't predict. Let price dictate what to do. Right now, it's very unclear what the pound dollar wants to do. Does it want to continue gaining strength, or does it want to find resistance at 1.3, which is currently what it's doing, and then move to the downside? Now, if you actually look at this, we had a move from 1.7 down to 1.5, round number. We had a bounce up to where? 1.6. So this bounce was 1,000 pips. Then it came down to 1.4. Came back up to 1.5, so another bounce of 1,000 pips, came down to 1.2, bounced back up to 1.3, so that's a move of 1,000 pips. 1,000 pips here, 1,000 pips here, 1,000 pips here. It's not doing anything uncommon that it's been doing since 2014. Okay, now if we go down to the weekly time frame, we're below the 200 on the weekly, and the trend filter is green. And we're above the daily 200 on the daily, and the trend filter is black. Now what I'm looking for is the weekly and the daily to be in alignment. I want the weekly and the daily to be mirroring each other. So if the weekly is if the daily is above the 200, then ideally I want it to be up above the weekly. I want to see the trend filter to be the same color. So if you notice, I don't have the standard red and green candlesticks. I have a trend filter that gives me periods of bearish trend, periods of bullish trend, and if it's in a consolidation, then they'll be black. What I want is sustained coloring. So if you look at the moment, we can see very clearly, guys, that when the trend filter is alternating between red, black, and green, like it is here, then this is a consolidation. So the pound dollar, very much in consolidation. What I'm looking for is the trend filter to clear, for price rather, to break and close above 1.3, the trend filter to be green, and to see price starts moving towards 1.4. When it does that, I may start looking for long opportunities. Now, I did just say that if price is below the weekly and above the daily, then I look to stand aside. Ideally, I want them to be in alignment. However, if you look at the distance between where price is and the weekly, you're looking at 2,000 pips. So I'm not going to wait 2,000 pips before price clears above the 200 before looking to place any trades. If I'm going against, if the weekly and the daily are almost in alignment. So what do I mean by that? Well, above the 200, trend filter is green, weekly trend filter is green, but below the daily 200, below the weekly 200. So I'm looking for 4 elements below both moving averages and the trend filter to be the same color on both time frames. What I've got is 3 out of the 4. Price is above the 200. If it clears this high point, the trend filter will turn green. The trend filter is already green on the weekly, so I will have 3 elements in alignment, but it's below the weekly 200, so that's the one element that is not there. That doesn't mean to say that I wouldn't take the trade. What it would say is that I would take the trade if price sets up, but I would reduce my risk. So full allocation is usually 2%, but if something is missing, then I would allocate risk, but at only 1% or 0.5%, depending on what strategy that I'm using. Okay, so if you have a look at the Euro Aussie dollar, now the Euro Aussie dollar looks slightly more interesting than your Euro dollar. So if you have a look, we can see that price is above 1.5. It's come back to retest 1.5. But if it starts moving further up towards 1.6, 1.7, if it clears this high point, look at the clear white space to the upside. So the Euro Aussie dollar has good potential to it if this bull trend continues. Now, if you look at the weekly, above the weekly 200, trend filter is green. This is what I'm looking for. Look at the daily. Above the daily 200, trend filter is now black because it's doing a pullback. Now, if you look at the pullback has come to a previous resistance, which is now acting as support, which is at that 1.5 half figure level. This is a significant level of support or resistance. Now, what price is doing is something that's very natural, which is whenever it breaks a key level of support or resistance, it likes to come back to retest that. This is exactly what it's doing. Now, these aren't hard levels, guys. Don't expect price to come back to these support and resistance levels pit perfect. These are zonal areas. So there's a range around 1.5. You can see that this resistance, which is currently acting as support, is that zonal area around 1.5. What we want to see is price break and close above this high point. If you look at the trend structure from this point, trend, pullback, trend, pullback, trend, pullback, trend, bit of a messy consolidation, move up, pullback. We expect it to be a little bit messy around 1.5. What we're now looking for is this trend to continue. A break and a close above this high is what I'm now waiting for. And if I get a break and a close above this high point, this is a trade that I will be looking to take. So this is where patience comes in. And if you look at the risk to reward, good move up towards 1.6. Few resistance levels ahead. If it clears that high, plenty of white space ahead. So once I get into that trend and it starts clearing resistance levels, then I will strategically start adding more positions or compounding. I do not set take profit levels. I do not look to take profit. If I'm in a winning position, I keep on adding. If I'm in a losing position, I get out. Why private traders blow accounts? Because the whole process is reversed. And it's because it's emotionally driven. When private traders get a bit of profit, what is the first thing they do? Well, greed or fear comes in and they bank the profit. When they're in a losing position, hope comes in. Hope that it will reverse. If you can't stomach losses, then you shouldn't be trading. Put your money somewhere else, put your time somewhere else, do something more useful with it. If you can't stomach losses, trading is not for you because losses are part and parcel of trading. What you need to do is be able to keep your losses small, cap them. But then to recover your losses and to grow an account, you must let your winning positions run. You can't expect to keep on taking profit on your winning trades and then grow an account. Because for every time you have a winning run, there will be a losing run. And the losing run cancels out the winning run. But then what private traders do is get frustrated and they start increasing their risk, thinking that I just need to increase my risk so my winners are bigger than my losers. And that becomes very dangerous because you then start getting into larger losses, which then leads to margin calls and blown accounts. It's not how it's done. Okay, so the Euro Aussie dollar is a currency that I've got my eye on. Pound Aussie dollar, again, another one that I'm keeping my eye on. If you look, it's in consolidation. We've had a breakout above 1.7, but it still hasn't really gone anywhere. What we're looking for is price to really try and exploit this white space ahead. Now, if you look at the weekly, below the weekly 200, very much in consolidation, you can see we've got red, black, green. Price is consolidating. Yes, we've got a bit of a bull run, but overall in consolidation. What we need to see is a move to the upside, and we're below the weekly 200, which is not ideal. Daily, above the daily 200, again, a consolidation. So if price clears this high point, starts creating new highs, then the pound Aussie dollar is one that I will very much keep an eye on. Okay, so if you look at all the other major currencies, pound Japanese yen hasn't really gone anywhere since the last time I looked at it. You can see that it's around the weekly 200. Trend filters alternating between green, black, and red, suggesting consolidation. Same with the daily time frame. It's just going sideways. So again, very messy, not something that I'm keen to get involved in. And when you see the stocks that I'm involved in, you'll see why. Okay, New Zealand dollar starting to look quite interesting, starting to see move to the upside. You can see how that round number 0.7 held strong. Overall, still in a bit of consolidation. If you look at the weekly, it's going sideways. It's below the weekly 200. It's going sideways. The trend filter is alternating. What we want is a sustained period of trend here. If you look, just red, especially from this point here, it's red all the way through. There's a little bit of black during the pullbacks. That isn't all too bad because pullbacks can be good entry points into the market. But since that point here, it's just been undecided. So this is a currency that when it clears the weekly 200, I will be keeping an eye on. On the daily, we can see that it's now starting to gather strength. But overall, if I compress it, it's very choppy. It's not something that you really want to be getting involved in. I missed the US dollar Canadian dollar. US dollar Canadian dollar is the same as well, very similar structure. It isn't a bullish trend, I guess, to the upside, but it's not a trend that is very appealing, and I'll show you why. On the weekly, we're above the weekly 200. You can see it's a very slow moving trend to the upside. This here is a much more appealing looking move to the upside, and this here. This is moving up, but it's more sort of up and sideways as opposed to up, which is what we want. And if you compress the daily chart, you can see it's very choppy. So it is above the daily 200, but again, not a very good looking currency, not one that I particularly want to get involved in. So this is predominantly what the currency market is about. It's messy, it's choppy, it's difficult to trade, but private traders are fixated with FX. It's almost kind of like a rabbit in a headlight scenario, which is, okay, it hasn't worked today, but if I keep on going at it, it will eventually work. It must eventually work because everyone says it will work. and if you look at who everyone is, it's usually brokers. It's usually the brokers that are pushing FX really heavily because they know that there's people out there who want more money, a lot of people out there who want more money, and they view the FX market as the way of getting more money, which isn't incorrect, but there's a time to be involved and there's a time to stand aside. In trading, money is not made like a 9 to 5. If you think of how we are programmed to make money from when we're young, it's a salary. You know, our first job, I remember my first job, I was paid £3.20 back in, 1996. I was paid £3.20, which was the minimum wage, an hour. From there, I then moved on. I made like £5 an hour in my next job. And then, you know, I got a degree and I went out into the big bad world and I found a job. I started commanding a salary. I think my first salary was, I think 18 or 19,000 pounds a year, which is crazy. I can't ever imagine earning that now. But 18 or 19,000 pounds a year. Everything is determined on a salary basis. Even if you're a contractor, some of the guys that I've mentored who are earning very, very good money as contractors. I know some of them are earning between £700 to £1,000 a day as software programmers, as coders. This is vast sums of money, but the point is that it's still a rate. And it's with that logic and mindset that people then come to trading, thinking, well, if I'm earning £2,000, £3,000, £4,000 a month or whatever it is in my day job, I might as well just sit in front of my computer and try and make that money, which is ludicrous, because why would you want to give up a lifestyle to sit in front of the computer looking at charts all day? It just doesn't make sense to me. But you know, people make decisions, they have the right to make decisions. But in trading, money is made in periods. If you look at people like Warren Buffett, that's how he's done it. George Soros, Jesse Livermore, the Turtle Traders. If you haven't read Way of the Turtle by Curtis Faith, read it. If you haven't read Reminiscence of a Stock Operator, read it. If you haven't read How I Made $2 Million in the Stock Market. Read it. These are three essential books. They've all got the same theme, which is they're all technical traders and they are all long-term traders. Warren Buffett is an investor, but he's long-term. He holds positions for years. So the idea of day trading and making quick money only really came about since the creation of the internet and software. And the only people that can do very well from short-term trading are institutions because they have billions available to them. They have computers that can take advantage of small moves and make vast sums of money, whereas private traders don't have that luxury. Most private traders don't have that luxury. We start with thousands of pounds, in which case we want to grow our account to millions, which is, guys, I can tell you it's very possible, but not in the time scale and not with the mindset that most private traders come in with. The time scale is I want to achieve this now, so instant gratification. And the mindset is I don't need to invest in it. This is not a business. This is more of a casino or a lottery. I've got everything freely available. I'm just going to use what's free to try and make that money. So the foundation to trading is totally wrong. So you want to change that. You want to think of this more as a business, and you want to think of it more in terms of, right, what is my first year plan? What is my second year plan? What is my 5-year plan? What is my 10-year plan? If you give this the time, then those large 6-figure, 7-figure accounts are more than possible. So you've just got to rethink your approach. So for me, currencies very much flat. So let's look at what I have been trading in the last year or so, and it's very much been stocks, UK stocks and US stocks. They've just gone through the roof. So Nvidia, if you're not familiar with Nvidia or the stock of Nvidia, if you've not even heard of Nvidia, then Nvidia basically make the graphics cards within PCs. I believe they're branching out now into artificial intelligence, and they're doing a lot of interesting stuff. I first entered into Nvidia when it broke above $40. So this is back in May of last year. And since $40, this has just gone through the roof. And you can see now it's just short of $150. I even managed to hold my positions through this period of consolidation. This is all part and parcel of good trading, understanding key levels of support and resistance. And the logic behind this is very simple. $100. $100 is a key level of support and resistance. So by having my stop loss well placed to allow for this, I've now allowed the market to move further in my favor. And the positions that have been open since $40, they're still open today. And this stock alone has returned me vast sums of money. Vast. A single stock will change the outlook of your trading account if you know how to hold and compound. If you look at the weekly, above the weekly 200, trend filter has been predominantly green all the way through. During consolidations and pullbacks, it will change color. You can see only one red bar. Because there was only one red bar, I didn't need to exit. If I had a second red bar, then I would look at things differently. But I only had one red bar, and if you look at that red bar, it respected a support level and had a bounce to the upside and a continuation. If it clears 150, guys, this will move to 200. That's the natural rhythm of stocks. And often people say, well, that will never happen. This has reached an all-time high. Oh, yeah? So if you look at Amazon, can you imagine how many times people would have said this wouldn't go any further? Well, Amazon now is above $1,000. This was at around $250 a couple of years back. Around here, 2015, this was at around around $250 or odd. So let's say 300, around that level. So in the last 2 years, this has gone up to $1,000, and as of now, it's above $1,000. So there would have been people out there who would have said Amazon won't even go above $1,000. I had a conversation with someone the other day who said that Apple would never break $150. Well, Apple is now at $155. I'm long on Apple, and I've been long on Apple for quite some time. And it's at above 150. It's above $150, and now it's above $150. It's likely to go to $200. Now, it may fail at this point and start heading back down again. In which case, I've got my stop loss in play, and I've got a good profit locked in. But the point is that it's broken above $150. Never have an opinion. I've got another, I know another individual who wants to go long on Tesla. Now, his logic to go long on Tesla is that Elon Musk is a cool guy. These are his exact words. Elon Musk is a cool guy. That's his reason to be going long on Tesla. It's a ludicrous reason to be going long on Tesla. You want to be going long on Tesla simply because it's creating new highs. Now, when I last looked at Tesla on FX Street, it was around $300. It's now cleared $300. So stocks will continue as long as that stock wants to continue. So you want to be involved in stocks right now. If you look at, excuse me, if you want to look at UK stocks, a UK stock that has been doing very well is Boohoo. It's a UK online clothing company. It's gone through the roof. I've been long on Boohoo since I think it was around 60 pence, around this level here, when it broke this high point here. So above 60 pence. I can't remember exactly where my first entry point is, but this is going back to last year. And you can see that it's now at 240 pence. So this is quadrupled its value. If you look at the weekly, there is no 200 moving average, but the trend filter is green because it's quite a new stock. And if you look at the daily, above the daily 200, trend filter has been predominantly green. Now, there will be areas where the trend filter turns black or red during the pullbacks, but as long as the weekly remains green, I don't need to worry about the noise that's being created on the daily. If you look at what's happened today, it's continued again. So this is not showing any signs of slowing down. This is just going through the roof. Another UK stock that I'm in and is doing very well is Burford Capital. Burford Capital is going through the roof. This is now just short of £10. So again, I've been long on Burford Capital since above £5. This has doubled its value. Weekly, above the weekly 200, trend filter is green. Now look at the daily. Above the daily 200, another move up today. This is today's move to the upside. So it's broken out and it's creating a new high, and it's just short of £10. Now the key to trading Burford Capital is understanding that every time it pulls back to a previous level of resistance, which is acting as support. So if you have a look here, we had a gap up, and if you look at where price came to, it came to that. It won't always be perfect, guys, but it came to resistance, support levels, and then bounced up. If you look here, we had another move. Came to around this area, and then bounced up again. Now it broke through here, but where did it come to? £7. £7 is a round number. We had a bounce off £7, and we had a continuation. So by understanding key levels of support and resistance will allow you to stay in trends longer. So we had another move to the upside, came to £9, which is a round number, found a bit of resistance, came to this previous level of resistance, which was acting as support. So you can even look at this as a zonal area, and then bounce back up again. So this is the key to staying in trades long, by understanding the nature of a particular stock, that if it is pulling back regularly, you want to give it the space to do that. Now, when a stock is pulling back, pullbacks offer an opportunity to enter into the stock. So where most people are selling, you should be looking to buy. This is what trading is all about. For every seller, there's a buyer. For every winner, there's a loser. So where most people are selling, you should be looking to buy. Key levels of support and resistance are fundamental levels where buying, where people in a bull trend where people are selling, you should be looking to buy. So I compounded at this area. So I've got multiple positions in play. I compounded at this area. It's gone again. And since the breakout, I've compounded 2 more times. So in the space of 5 weeks, I've got 3 compounds running, all added to the compounds which I've been running since here. And I'm milking Burford Capital for everything that it's giving me. And this process, just to give you an idea of my lifestyle as a trader, my routine as a trader, I spend Saturday to Sunday is my week. Monday to Friday is my weekend. You want to reverse the whole process. Saturday to Sunday is my week. Monday to Friday is my weekend. Now, that doesn't mean I spend all Saturday and Sunday working. It means that I spend half an hour to an hour, usually on Sunday, where I do my scanning using my software. I do my in-depth analysis. I look at stocks and currencies and commodities in more detail, and I prepare a watch list for the week ahead. So I know exactly which currencies, which stocks, and which commodities I'm looking at. Monday to Friday, I put that plan of action into practice. And that takes me no more than 20 minutes a day. Sometimes as little as 1 minute because there's nothing going on. Sometimes I don't even open my computer. So let's say a day or two before NFP. I don't trade NFP. So Wednesday, Thursday, Friday, my computer is closed. So Wednesday, Thursday, Friday, Saturday, Sunday, effectively I have a 5-day weekend. What I've learned to do is build a lifestyle from trading that extracts profit and significant profit in as little time as possible, but I maximize the profit phase by compounding. And then what this has given me is a lifestyle where I have money coming through and good money coming through. And I also have the time to enjoy my day and do things that I want to do day to day. And this is the benefit of day trading. I should be shot for that. This is the benefit of trend trading. You're not sacrificing anything. There's no compromise. You've taken control of your money by removing institutions, and you've taken control of your time by getting rid of the 9 to 5 system. That's what I wanted to achieve. It's not everyone's goal. Other people who I've trained are business owners, very happy, very successful business owners. They're just leveraging their salary and the money they're making further, which is smart. If you're making, thousands of pounds that you can potentially put into a trading account on a monthly basis, why would you leave it in a bank? Put it into trading, put it into investing, and watch it grow further. Okay, so that is effectively what I've been doing, guys. LRCX, I'll just give you another few examples of stocks that I'm in. LRCX, I've been long on since $100. This is now over $160. If you look at the weekly, above the weekly 200, the trend filter has remained green all the way through. If you look at the daily, above the daily 200, look at the move to the upside. See where I got in? I got in at what is known as an inside bar. An inside bar, it's where you have a pullback to a key level of support or resistance, in which case $100. And then the next bar is completely inside the previous bar. So you can call the previous bar, I guess you could call it even say the mother bar. And then we've got the following bar, which is the inside bar. It's completely inside the range of the previous bar. Think of it as a spring. So once we have a spring against support, what we're looking for is price to bounce off it. And that's exactly what's happened. So this was a fantastic entry point, and this has now gone on. This was back in December of last year, and this is now at over $160. Okay, so now the psychology of trading, which is something that people talk about, is, what is that? People have the definition of the psychology of trading totally wrong. A lot of people have systems that don't work. Their systems are dud. They're not robust enough to deal with market conditions. They're not robust enough to deal with pullbacks. The system itself, the strategy that most people are using is dud. But that's not what they acknowledge. What they acknowledge is the fact that maybe my psychology is wrong and I don't have the right mindset. That's a totally incorrect approach. It's a flawed approach. It's a false economy. If your system is dud, it doesn't matter how much you pay a psychologist, it's not going to work. What you want is to understand how the markets operate, how to read price action. You want proven strategies that already work, and you then want to be able to put those strategies into practice. And then the psychology of trading will take care of itself. Now, what is the psychology of trading? The psychology of trading is learning to hold during pullback periods. So if you have a look here, we had a move to the upside, then the market goes against me. So at the peak here, let's say I was £10,000 in profit. As the market comes against me, I'm £8,000 in profit. So at this point here, I'm 8,000 when I could have had 10,000. So what do people do? They panic, they close their positions. But this is where the psychology of trading comes in. This is where having mental strength, and this comes with time and experience. It doesn't happen straight away. And it doesn't happen by seeing a therapist. It happens by understanding price, time, experience, practice, and being part of the right support network, the right community. This is where it comes in. So at this point, if you close your positions out of panic, you would have missed out on the rest of what the market was giving you. So you've really got to readdress why trading is going wrong and what needs to be done to correct it. Okay, let's have a look at what's going on. Montreal, let's have a look at some of the questions. If you've got any questions, guys, please ask. So you enter on breakouts of a high or a low, depending on the trend. What about entering on a retest of a pullback? Yeah, I think I've answered your question there, Montreal. I look at both. Breakouts are easier to identify because they confirm the trend. A breakout is a breakout. Pullbacks require a little bit more understanding because a pullback could be a trend reversal. It could go into consolidation. So depending on the market structure, depending on what price it's telling me, I will look to trade either breakouts or pullbacks. Breakouts are just far more versatile. You can use them across the board. Pullbacks are far more specific. But yeah, Trading in the Zone. Yeah, great book as well, Mark Douglas. I would say Trading in the Zone is probably a little bit more relevant to short-term traders because they need to be in the zone. Trend traders, long-term traders, I don't necessarily believe you need to be in the zone. It's much slower, requires more patience. But yeah, it's still definitely a good read because it explains elements such as what is a good trade. People often get the definition wrong. What is a good trade? A good trade is not where you make lots of money. A good trade is where you follow your trading plan regardless of the outcome. Regardless of the outcome, because the outcome of a trade is unknown. But so if it's a losing trade and you followed your trading plan, that's a good trade. If it's a winning trade and you broke your rules, that's a bad trade. So, but of course, what is in your trading plan is fundamental to all of this. And a lot of the times, the information that people have in their trading plan is not the best information. It's what's the word I'm looking for? It's short in terms of what is the correct information that should be in there. Okay, I'm conscious of the time. It's now 1:45. Are there any final questions? Are there any questions coming through from YouTube, administrator? Okay, if there's no questions, I'm just going to direct you guys. Yeah, okay. I don't know if administrators can hear me. So once again, guys, if you want to do the training, zaheer.live/seminar here in the UK, this is on the 16th of June. This is £297, as I said, for 3 months. If you want to do the training online and be part of the community, it's the same cost as well. It's £297 for 3 months. Guys, there's a 30-day money-back guarantee on this. So if you're not happy, we'll give you your money back. It's not something that happens, but if you want your money back, we'll be happy to do that. Please check out my Medium blog, medium.com/@Zaheer Anwari. I update this pretty much daily, all the stocks that I'm looking at. I've just talked about Nvidia, some UK stocks, talked about the indices, currencies, etc., chart patterns. So yeah, I don't think you will find a blog that has the content and the information anywhere else on the internet. So please check out my blog. Please follow me. Yeah, if you're on LinkedIn, guys, please search for me and add me on LinkedIn. And I've also got a Facebook page as well. So I've got a personal profile, which you can search for me under my name. But you can also look for my Facebook page as well. And I update that regularly as well. Okay, administrator, are you there? No other questions. Yeah, okay. So no questions coming through from YouTube. Okay, if you do have any questions, then please email me on zaheer@zaheeranwari.com. I've just put that in the chat box. Zaheer@zaheeranwari.com. Okay, administrator, thank you. Rest of you guys, enjoy the rest of your week, and I will see you next week. Actually, I don't know if I'll see you next week. I believe YouTube, FX Street rather, have changed their format. Administrator, I've got your email. I'm going to be responding to that. So I believe I'll be moving into the premium section. So if you are in the premium section, then I will see you guys there. Okay, take care. See you. Bye-bye.